Thank you, Mark, and a big hello from London. We have a lot to get through today, as not only have I last week's weekly technical actions to discuss, and there are quite a few, but hot off the press, so to speak, are the monthly technical actions for October. Okay, so I'll start with last week's weekly key reversals. And in the currencies, we had a weekly key reversal up in the Aussie dollar against the US dollar, which has generated nothing this week, neither moving higher or lower, and staying within last week's range. I'd also say the same to the weekly key reversal down we saw in cable, that's sterling against the US dollar. Nothing there, with the market also stuck inside last week's range. I'll go into why this is happening in cable, sterling against the US dollar, in my daily FX video commentaries. Then we had a weekly key reversal down last week in sterling against the yen. And here there was movement, but in the wrong direction, with a significant move higher that closed well outside last week's range. But on the top side, though prices have pulled back down a bit today. Then there was a weekly key reversal down in sterling against the rand, South African rand, and in this, well, we have seen a follow-through lower this week, but it took until yesterday to generate such a move. However, we are back into the contrariness camp again, with a weekly key reversal up in US dollar Egyptian pound 1 month NDF, which is now lower this week, though admittedly still within last week's range. Finally, in the currencies, we had a weekly key reversal down in the US dollar Thai bar. We saw an immediate follow-on lower on Monday this week, but since then, prices have turned back up, and we are still within last week's range. Overall, currencies have been pretty obtuse. Next, we have the commodities, and we had a weekly key reversal up last week in both the New York and London sugar futures. However, the obtuse nature of last week strikes here again, as both had a more than suitable start lower on Monday, but by Tuesday, they had all finished, and today we are back well within last week's range, and currently towards the top end of the range as well. Indeed, London sugar futures are doing a passable impression of trying to create and building an immediate countering weekly key reversal up for this week. I'd now like to look at LME 3-month copper, which last week had a weekly key reversal up, whilst exiting a small descending triangle pattern at the same time. We have seen a follow-on higher this week, but the move up has been capped by the combination of flatlining short-medium moving average, currently at 81.97, and the January 2021 high at 82.39. We are still higher than last week right now, and I go into all of this in more detailed manner in my daily copper and aluminium video commentary. Elsewhere, we had a weekly key reversal up in EX butter futures last week. It was an impressive move last week, but there has been no action, neither higher nor lower, in this market since then. Finally, we had a weekly key reversal up in NYMEX Henry Hub NatGas futures last week. And this had a suitable move higher this week, mainly yesterday, though today is seeing some tempering of the bullish incentive there. That covers the weekly technical actions. Let's now look at the monthly technical actions for October, starting with the currencies. And in the currencies, we had a mixed bag of technical actions for October. In Euro Yen, we had a monthly key reversal up in October, which, to be honest, was not really that much of a surprise. And it'll be interesting to see if this works through higher from now onwards. We had a monthly key reversal down in Kiwi dollar against the US dollar in October, with new lows here not seen since November last year. We had a monthly key reversal down in US dollar against the South African rand in October, with what looks like an immediate follow-through lower this week. Enough that today we have seen prices below the long moving average here, currently 18.56.53, for the first time since the start of August. Finally, in the currencies, we saw a monthly key reversal down in spot US dollar Russian ruble, and also in the US dollar Russian ruble 1 month NDF. Next, we had a monthly key reversal up in October in spot gold, which is a result of a specific series of patterns on the daily chart, specifically a sideways triangle from August through to late September, with the addition of a cat's ears pattern. Yes, you heard me correctly. There is a technical analysis pattern called a cat's ears pattern. Essentially, it is a small double top in a downtrend, which was followed by a V bottom in late September, going into October. That led to a new pattern that is currently running the show here, called a diving board pattern. Yes, again, you heard me correctly. We do indeed have a pattern called a diving board pattern. Essentially, it's a bullish pattern that follows on from a V bottom. That approach, as long as you approach to the V, is in a flattish action, as we saw in August and September with a sideways triangle. Next, we had a monthly key reversal down in the ICE EUA carbon futures for December 2023. This is a beautiful piece of action, as it fits in so well within a June to date bear channel, currently 77.29 to 87 even. It does look good on this daily chart. Onto cocoa futures now, and specifically new cocoa futures, which had a monthly key reversal up in October, and which started well on Monday, this past Monday, but only to see prices since then drop back into last month's range. Next is LME 3-month zinc, which had a monthly key reversal down in October. Now, before I go into today's actions, I will briefly set the scene. In the big picture, the market is being pressured lower by the May to August 2022 bearish shift pitfall, which you can see highlighted in purple on my daily chart. However, in the recent immediate past, we have seen the creation of a small May to August shallow, perhaps too shallow, bullish shift pitfall, which is highlighted in bright red on my daily chart. I go into the interaction of these two pitchforks, one bearish and one bullish, in my weekly metals video commentary that was published yesterday. Then we come to today's action. From a technical point of view, it is a perfect capture between the support below from the congestion at 23.97 and the resistance overhead at 26.01. Either side of the recent bullish shift pitchforks, middle time currently at 24.76. Despite this last range, nothing has changed in the overall picture right now. Right now, we are not even set up for a weekly key reversal this week, not yet at least. Finally, we had a monthly key reversal up in Chicago soybean meal futures. And this comes somewhat unsurprisingly after the market broke higher out of the recent late July to mid-October bearish shift pitchfork, which is highlighted in purple on my daily chart. This break higher punched up through two separate 50% Fibonacci lines at 390 even and 403.60, as well as the short medium moving average currently at 397.70 and the medium moving average currently at 405.70, before seemingly peaking at the slowly declining long moving average currently 426.10, which is highlighted in gold on my daily chart. Since then, prices have pulled back to the lesser Fibonacci line at 415.5, though it seems the slowly rising medium moving average may be a better support now than it was as resistance 2 weeks ago. It seems for now as if the market is looking to see if some fresh monthly key reversal up bullish incentive will be generated. We should see if this is true in the next couple of days, but for now, we might just be starting a trading range between the overhead long moving average and the combination of the medium moving average and 50% Fibonacci line below. I detail more on this in my weekly oilseeds and vegetable oils commentary published last Thursday, and a new one will be out tomorrow. As always, I am happy to answer any direct questions with anyone who is interested, and with that I'll finish this section from London, and I hope that you found these comments useful.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.